Good morning, good evening, good afternoon. This is the Papa Joe Show, where Papa Joe knows I am your host, Papa Joe, and I am sorry that I am late today. It has been a crazy morning. Lots of stuff going on at work, lots of fires trying to put out. So, yeah, and here I am, having fun, digging into some stuff. We're going to continue to look at some crazy, crazy cool stuff. Real quick, though, Bitcoin just hit $29,000. Boom. Cool. Anyways, yeah, we're going to take a look at some stuff around the uh, overall economy. And some things that I have been paying attention to. I haven't really talked about this too much the past few weeks, like just focusing on what's going on with this, some stuff going on with the credit or debt, and then some different other pieces of the puzzle. One thing I have for sure noticed is that in my area, we're getting buzzed a lot by H-60s, stuff like that. A lot of military aircraft. Don't know what's going on in your neck of the woods, but that's kind of abnormal for this particular area. So, anyhow, so if you hear those buzzings, they're coming real low and really hot. So, sorry for the noise if you do hear that. So, anyways, if you're new to the channel, do me a favor, give us a subscribe, grab the bell when you know when we go live, because I'm not always on time and we do multiple shows per week. So, come check it out. I do appreciate those of you who are there. And then, of course, there is the Patreon. If you just want to support the channel, um, jump in there. It's not even a cup of coffee. Otherwise, other stuff I put in there is I do some more in-depth digging and things like what we're going to talk about here, but I also have conversations or interviews with folks around stuff that get this channel taken offline kind of thing. So anyhow, check that out. I appreciate all of you who already have. So, anyways, let's look into what's going on today, huh? Bank lending plunges by largest measure on record as credit crunch alarm rings louder. Now, I don't know if anyone's noticed anything recently, if anyone has attempted to do any larger bank transfers. I have people coming to me and they're like, "Hey," asking me if I've noticed, but I don't do anything like that. But people who are doing larger bank transfers between bank to bank, instead of it happening the next day like it's supposed to, nothing's updating. Nothing's changing. Things are being held. Basically, what they're doing is they're getting on the phone and calling the other bank. Is the money actually there? Is the other bank solvent? It's happening a lot. So this happens across the board. The person who reached out to me was around a credit card saying, "Hey, I tried to pay my credit card to zero like I do every month." So basically, they rack up their month's whatever on it, and then they push it down to zero. And this time around, the balances didn't update, and it's still pending. It's like what's going on, y'all? So yeah, fun stuff. Great credit crunch here. Lending by U.S. banks has plunged. In other words, the banks aren't really lending anymore, and they're contracting. I had someone else reach out to me saying, "Hey, I had like 4 or 5 credit cards. All of them decreased the available amount of credit on them. Available credit was decreased by 50% or more." And it's like, um, now what? This is just happening. Okay, across the board, this is happening to people. I'm sure, show of hands, y'all probably have this type of stuff happening in you or someone you know. And I hate that. I really, really do. Anyhow, so it's plunged by the biggest amount. Oh yeah, the other thing I was going to suggest around this, or mention here, um, banks aren't really writing mortgages anymore. They are, but they're really, really, really getting strict on their requirements. Okay, just kind of like they did in 2008. All of a sudden, people couldn't buy houses because they couldn't get a mortgage, no matter how good their credit was. Maybe their income wasn't right. Maybe their debt to income was not what it needs to be, and that froze everything. And that's happening again right now. So this is a record in the final 2 weeks of March, according to the latest data from the Federal Reserve, prompting analysts to renew warnings of recession and stagflation. It's not going to change until it actually happens. If you pay attention to Economic Ninja, he's been saying later on this year, in the fall, that we will have a massive correction. And I don't necessarily think he's wrong. I honestly thought it would have already kind of started happening now, and it already kind of is, but it's not as fast as I thought it would be. But he's been around the block, so to speak, and knows a thing or two. So go check his channel out for sure. Anyhow, the Fed data shows that commercial banking lending in the United States fell by 105 billion in the 2 weeks ending March 29th, the largest pullback in the measure on record, which dates back to 1973. The lending collapse was led by a decrease in real estate loans and commercial and industrial loans, the Fed data showed. So that's not a good thing for businesses from the industrial type loans. That's not a good thing for that. My wife actually pointed something interesting out the other day. You guys know that debt creation is done out of thin air, and the debt and the debt creation is effectively in the insurance or the lifeblood of their little game. Yeah, fun stuff. What the heck? How does that work? Basically, it is they keep writing loans, they keep creating money because their little system doesn't work without that happening. Without you asking for more loans, or your everyday people, or commercial loans, or business loans, or whatever, without loans being created, their system stops. That's why Bitcoin and cryptocurrency is such a big deal. If we opt out of their system, then it dies, literally. Paying your debt off is a big no-no to them. They do not like that because it takes money out of their system. It's backwards. You use your debt, you create the money using the debt. As soon as you pay off, say, a credit card, even though you have a available credit on there, guess what? You just erased their funds. Yeah, that's what happens. You pay off a mortgage, or you pay off all your debt. You become debt-free. You are no longer a debt slave, so to speak. You effectively erased your footprint, so to speak, in their system. If you're opting out, crypto is a big way to do that. Anyhow, the lending collapse was led by a decrease in real estate loans and commercial. I already read that, didn't I? Sorry. Horrible credit numbers. Financial analyst Andreas Santo Larson, I hope I did that right, whatever, commented on the Fed's data release on a post on Twitter. We are now slow walking into a recessionary credit crunch. And indeed we are. The credit crunch the Fed fears may already be taking shape. Washington, April 10th. So today, Jeffrey Haley, the CEO of American National Bank and Trust Company, saw the crunch coming at the start of 2023. I think those of us here in this channel here in PAPAJO stuff, we saw it happening a long time ago. Last year before last even. Anyhow, raising interest rates and slowing economy to him meant that loan growth would likely fall by half. That's net new money creation. That means that they're literally going to have so-called all the arteries in the body are going to completely just, and it's going to die. The system's going to die from doing that. Anyhow, as the so it's going to fall by half. Sorry. This Virginia-based community bank turned its focus to better quality, higher yielding credit. In other words, higher interest rates and people who are more qualified to have them. Worrying little about the volume. So they want to make sure that they actually can get their money out of the people they're lending to. So you have to be overqualified to be able to even get these types of loans. And in some cases, a lot of cases, that is the way it is. But this is how this system works. Without the loan creation, without the dollar creation into existence from the loans, and that is how it works. Because I've told you all this before, when Congress goes to get a bill funded, they don't go to the Treasury, they go to the Federal Reserve, which is a privately run bank, as those of you who have read The Creature from Jekyll Island understand. It is not owned by any government. It is federal in name only and has nothing to do with the federal government. But I digress. So all of that happens is they take the bill, they take it to the Federal Reserve. Federal Reserve says, sure, here you go, and here's the interest on it immediately. It's not a loan where or a money creation where they get zero interest rates. Well, it was the past few years, but it's not that way. Just for y'all to understand, um, the interest rates on that immediately happen. They owe immediately. So you take, let's just make this really round. Take $100 and you owe interest on it. You pay that $100 back, you still owe the interest. Where are you going to get the money to pay for it? See how that works? Great little racket, huh? Anyway, then a pair of U.S. regional banks abruptly failed in mid-March. Yep. And they told him things were tightening further. The loan growth plunged and perhaps a quarter of what it was in 2022 when his bank loans book grew by 13% to around $2.1 billion. Coming in 2023, my rule of thumb was whatever you did last year, you will probably do half this year. Haley said, based on current events, I now think it gets cut in half again. Been telling y'all, cryptocurrency, gold and silver, it's the way to get out of this whole mess. Y'all do your research. It's not financial advice. I'm telling you what to do. I talk about different crypto projects because they're interesting to me. Some of them I have holdings, some of them I don't. And I think they're interesting. That's why I throw them out there for you guys. Y'all do your research. You go look at it. It's crazy, crazy stuff. So here, this is something that people need to also be paying attention to. Cliff High shared this on Truth Social. I grabbed it real quick, throwing it in here. Overnight reserve, repurchasing or repos, overnight repos, Treasury securities sold by the Federal Reserve in the temporary open market operations. Y'all see this? It is a, for sure, stark difference. Okay. A lot of people aren't realizing that, yeah, the whole pandemic, we'll call it, definitely spiked something. There was a massive sell-off in the markets. People knee-jerked, etc., etc. The good old Flashbang over there has done nothing but run the crap out of it. Because the banks don't trust each other to lend from each other. They're going to the lender of last resort. And it is them attempting to stay solvent on a daily basis. This is overnight. It is a daily solvency problem. It is basically it's a big drug that they can't get off of. There's not a way for them to, because they have fallen asleep at the helm and become extraordinarily irresponsible with what they're doing. Treasury yields fall on top of all of this after data shows U.S. job growth slowed in March. U.S. government debt prices were higher on Monday after data released last week hitting at a slowdown in job growth. The yield on the benchmark 10-year Treasury note slipped to 3.32 whatever percent. While the yield on the 30-year Treasury bond dipped to 3.58%. Prices moved inversely to yields. Many major markets are closed due to the long Easter weekend. Apparently today is supposed to be Easter Monday because, I don't know, they felt the need to whatever. But it's really not. It's still open. They're still running. Anyhow, last week, the Labor Department released a non-farm payroll data for March showing that the U.S. economy added 236,000 jobs over the period. The number was in line with expectations, but down from the 326,000 new hires in February. So we are contracting in hires. I have people I know who are attempting to get jobs. There are all kinds of job openings at all of these companies, but they're actually not hiring. They're just showing the job postings so that they can look like they're a healthy company. That's legitimately why they're doing that. No, they're not hiring. They'll go through the interview process and say, yep, no, we actually closed the position for now, even though it's officially still open on their websites. Someone who's been in an interview, y'all should like go and when you get that response and just maybe post it online. Hey, here's the job that I applied for. Here's the email I got that they're closing it, but it's still open. But anyways, what do I know? None of my business. All these things are tying together. Y'all see what's happening? There's a debt crisis in the country. The debt is what runs the economy. Without the debt, there is no economy. The economy is dying. It is dead. It is in the process of doing that. People argue with me. No, it's the flow of money. It's the flow of the goods and services, etc., etc. Yes, the money is the debt, though. It is their instrument. It is their insurance, so to speak. It is the insurance that you will continue to have to pay on your bills. You need to use that money to pay your bills. Well, you have to go into debt to pay those bills. You have to go into debt to buy a house. You have to go into debt to buy a car. You don't have to, but the vast majority of people don't save up $500,000 or more now, or 300,000, whatever. We'll go smaller. The vast majority of people don't go buy a house with cash like that, when the value of that particular purchase can fluctuate with the economy. They're not going to go park that much cash into something that they may or may not get that back out. They just won't. So they'll use somebody else's money and let it average out over the time. Oh, by the way, they're doing 40-year mortgages now. Yep. Fannie Mae, Freddie Mac, they approved 40-year mortgages. Also, people can save a couple $100 on a monthly basis. That's how bad this is getting, y'all. It's as bad as getting. And yet, billionaire investor Barry Steinlicht, whatever, I can say his name, Steinlicht, whatever, says inflation is going to drop hard. Just look at rents. Yes, rent prices have decreased a little bit, but as the overall market is concerned, they're not decreasing that much. Starwood Capital CEO Barry Sternlicht, I think that's how you say his name. Forget whatever. I'm always bad with last names. I am horrible with them. Anyways, he has a net worth of $4.6 billion. I guess that's on paper. Says inflation is going to drop, and it's going to drop hard. In an interview with CNBC's Squawk Box, he was asked what he'd say in response to JP Morgan Chase Jamie Dimon annual letter to shareholders, in which Dimon writes that current economic conditions create more risk and potentially higher inflation. The higher rate higher rate hikes. However, after saying he's a big fan, he's a big fan of Dimon, and that he runs probably one of the biggest banks in the world. He clarified to CNBC that we don't agree on everything. Stenlicht, who runs a private equity firm, for his billions in real estate holdings, and told CNBC that he thinks inflation is going to drop hard. I really don't think it is, y'all. I mean, we're going to have inflation until we have deflation. And when deflation happens, that's the problem. Because inflation is great for business. Businesses love inflation because on paper, they're making more and more money. It's inflating their books. But what happens when a contraction happens, when deflation happens, right? People stop actually spending their money. They actually stop doing those things, and then all of a sudden, those companies that are enjoying those massive influxes of funds and their whatever, all of a sudden freeze, and all of a sudden it starts to contract. The air gets let out of the balloon, right? And then when that happens, all these big stores, you got your Walmart, your Lowe's, whatever, the big names, Amazon, even Amazon's laid off people, guys. Amazon has laid people off. They are the largest retailer in the world. Walmart is considerably large as well. I don't know if they're the largest in the world. Don't hold me to that. In my mind, in the US, it's the largest one because it is the biggest competitor to everyone. Walmart is still pretty darn big because they're global. Anyhow, I digress. Lost my train of thought. They're laying people off. And that is a sign of air being let out of the balloon. All of a sudden, they're recognizing that our revenue is drying up. People aren't spending any more money. They're finding it elsewhere, or they're just not able to buy it anymore because they actually don't have the money to buy it. So when the revenue dries up, the company contracts everything. And people get hurt by that. And then the company starts to implode on itself because of the contraction, because there's no more lifeblood going into the company. This is the same thing with the debt. You quit. If they won't let you have the credit to even spend the credit to get yourself into debt, then there's an even bigger problem. It's a cyclical problem, guys. It goes round and round and round, just like a merry-go-round. And we're on board this crazy train and crazy ride, and it's not over yet, but it will be soon. And again, I'm telling y'all, I'm going to say it until I'm blue in the face. Probably not, because at some point, it's going to fall off a cliff, and at some point, people are going to go crap. Bitcoin's running 29,000. Why? There's a lot of reasons why. But people are concerned. Seriously concerned. Oh, look at this. To the point to where, let's pull this up here. Surging past $3.8 billion, Bitcoin recorded its 5 largest transactions of 2023. Somebody just bought a lot of Bitcoin. Bitcoin bulls are closing March on a rather positive note. The 20,000 Bitcoin transaction. Somebody bought 20,000 Bitcoin in a single transaction. Do y'all get this? It's not a little deal. The big boys are buying because they know that this is where the money's going. They don't necessarily know that this is where the money's going, but this is where legitimate people are buying. They're taking their money out of the markets and they're putting it into crypto. All right? It's going to be a really, really, really crazy year. And I'm telling y'all, if you want to protect yourselves, protect your families, etc., not trying to spread fear, uncertainty, doubt, or anything like that. I'm trying to tell y'all, this is where they're putting it. This is where they're going. This is how they're getting themselves out. And they're leaving you with the bags over on the other markets. That's what they do. First to flinch. It's a big game of chicken. As soon as somebody flinches, it's done. They're flinching. Bitcoin will probably, if I had to guess, with the amount of pressure that's coming in right now, I don't think you'll be seeing these numbers ever again. You might. You might. But I think we're going to head up from here in Bitcoin, and then that's going to drag everything else with it. All right? I really do. Let's run through it. Say hey to everyone. I got a meeting here in a few minutes I got to be ready for. So we got Tom. How are you doing, brother? It's good to see you. You as well, Gloria. Thanks for being part of the show as always. You guys are fantastic being here every day. I love it. It is joy to my heart. Daddy-O, same. Good to see you as well. Thanks for being here. Evan, can you do a video re-explaining what the debt market is for normies? That's kind of serendipitous. Basically, like I kind of just explained it from a very high level. It's basically the lifeblood or the drug that they can't get away from. Without it, there is no money creation. Without it, there is it freezes up because the money's not flowing. It's like having a clogged artery. It's like it just goes away. But anyhow, I could figure out more in-depth stuff, but this video actually was kind of a high level for that. More of a Patreon type of a conversation than anything. So, all right, Trinity, what's going on? How are you doing? It's good to see you. Let's see here. It's good to see you, brother. It's good to see you. Let's see who else we got here. Doop-a-doop. This is not loading. Sorry, y'all. Lithia. All right, there we go. There you go. It's good to see you, Lithia. Appreciate you being here. It's fantastic having you. Tom, nationwide rates jumping on auto insurance. Yes, sir, it is. It's jumping everywhere. Everything is jumping. We've got Larry in here today. It's good to see you. Thanks for being here. Fantastic. And we've got Bitcoin Bull. What's up? Blessings to you, my friend. And better late than never, man. Appreciate you being here. Cool. Guys, gals, y'all have a beautiful, blessed day. See you on the Patreon this afternoon. It should be around 4:30-ish. So, but we'll kind of go from there. Take it easy and be blessed. Talk to you later.